Do you want to capitalise on the projected growth opportunities in Brisbane? Streamline Property Buyers are your local area experts with a qualified property investment advisor, licensed builder and rent specialist, making them the most qualified buyers agents in Brisbane. This team know Brisbane property better than anyone else. Find out more at streamlineproperty.com.au.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day everyone, how you going? Thanks for joining us on the podcast today, and we're going to get straight into it. You might have heard over the last couple of episodes I've been doing plenty of shout outs to try and get more females into our studio. Some of the, I'm not going to say criticism, but some of the feedback we get on the show sometimes is a bit male dominated, and I completely agree. And we try and get ladies into the studio, but we do struggle with it sometimes. So if you're listening to this and you're a female property investor, we want to hear from you. Get in touch with us, come on the show, share your story. You can contact the team editor at smartpropertyinvestment.com.au. We'll tee it up. It's really easy. It's nice and simple. It's quite good fun. So do that, and we'd really appreciate it. But here to have a chat with me today, Patricia Cheah, property investor extraordinaire, maybe. How you going, Patricia? Well?
I'm good, Phil. How are you?
Oh, I'm all right. I normally sort of contextually try and like set up a conversation whenever I do the show, and often it depends whether or not someone's from within industry and they're supporting property investors or they're property investors themselves. And I like the property investor stories myself personally the most. I think it's great, and our audience really appreciate it. So thanks for coming in. Thanks for having me. Coming in to share your story, and how that's going to go, I don't know. But from the very brief chat that we had before we come on air, you have 5 properties.
I do.
So that would put you in a very small percentage of Australians that own 5 properties.
I would take your word for that.
No, it's true. So, and you're not old, so you must have started this when you're quite young.
It's the Asian genes.
So I really want to explore this journey of yours today. So what's happened up until now, and what the future holds. Are you Sydney-sider, Sydney-based?
I'm not. I'm from Perth, WA.
You're from Perth, are you?
Yeah, I'm from the other side.
What are you doing here in Sydney?
I specifically came here for the podcast, Phil, and to meet you.
Brilliant.
Yeah.
Well, thanks for making the trip.
No worries.
I reckon it's the worst flight in the world, Perth to Sydney.
Yeah, it was a tough one. I took the red eye.
You did the red eye, did you?
Yeah, I was telling Tom I hadn't slept for about 24 hours.
You're not going straight home. You're staying in Sydney for a couple of days, are you?
No, I'm going straight home tomorrow morning.
Oh, are you?
Yeah.
Okay. Well, thanks for making the effort to come and have a chat with us.
No
And I like getting Perth investors in. It's a long way away. And we do get out to Perth every now and then and try and record some. So are all your properties in Perth?
They all are in Perth.
Okay.
Yeah.
So this is an interesting story. How are you finding Perth at the moment? From a property market perspective.
Yeah.
It's a great place to live.
Great place to live, great lifestyle. The property market's a bit flat at the moment. I think we've been struggling for a few years and probably lost a bit of confidence in the property market in the short term. But I think if you're a long-term investor, you've done extremely well. But from a seller's perspective, I think they're hurting.
Yeah.
Buyers are probably in a better position at the moment because the prices have stagnated.
They have, but everyone I'm chatting to about Perth is saying, it's not a bad time to start looking at the Perth market. Good things are just around the corner.
We're seeing green shoots for sure, and that's fantastic. Interest rates have gone down, which has really helped. But I think the one thing that Perth really needs is either wage growth or more jobs coming back into the state. I really think that's going to turn things around, but we just haven't seen that yet.
I can tell immediately that you're one of these property investors who is very data focused about wage growth.
I'm very risk adverse, so data drives me.
That's really good. And the best property investors I see are able to balance the narrative of markets with the data, and that's how you can actually get a really good solution. But you actually work sort of within real estate. You're in marketing, but for a real estate agent. So that probably gives you a bit of a head start that every day you're sort of working on property, so you're getting the inside run.
Yeah, you do. You get a really good understanding of how the markets are doing. We work in a very tight-knit market, so to look at Perth as a whole on a metro level, it's a bit harder to gauge, but certainly in our areas we are finding that it's a 2-speed economy at the moment. There are properties that are moving and there are others that just aren't. Couldn't give them away.
And your agency, which area do you service?
We're servicing the western suburbs, Premium Riverside and Coastal.
Okay. Yep. So pretty high ticket properties, I guess, in the context of Perth.
Yep, high-end properties.
And how is the sort of high-end property market versus, I guess, a tale of two cities, the more affordable properties? Is the expensive stuff moving quicker than the more affordable stuff?
At the moment, moment, we're finding that they are, that the price range of about 1.2 median is moving quite quickly because they're heavily discounted from the 1.6 that they were at the height of the market. And a lot of buyers that are buying at the moment are finding they're getting a $400K reduction on what they would have paid a few years ago.
$400K?
Yeah, but purchasing at 1.2, they would have purchased at 1.6 a few years ago. So they're really finding that discount enticing them to step in.
So there must be a lot of people sort of getting into Perth property market now, which is great because I've been banging on about Sydney and Melbourne for the last couple of months because everyone's talking about it. So it's really good to crystallise on Perth, and the fact that you work in the real estate game means that you've got a bit of insight. So there must be people hurting if they're selling at such a big discount.
Yeah, unfortunately they are. People who bought at the height of the market, I mean, if we're appraising properties from 2007, 2006 even, we're finding that they probably purchased at the height of the market, and it's very hard to provide that feedback that they're not going to get their money back. So a lot of the time we'll either say hold or rent it out. But if you are prepared to take a loss, then we'll look at it. Yeah, it is a tough conversation to have.
I bet you it is. So you work in marketing, so you're not a real estate agent per se.
No.
You help market properties or market the agencies to win more listings.
Market the agency to win more listings,
okay.
Yeah.
All right. So so if you're not familiar with how real estate agents on the sales side work, is that probably half of their job is finding properties to sell, and then the other half is actually selling the property. So,
correct. Yeah.
Which is interesting, and the best agents are those which can get in front of more potential customers and pitch for the business, right?
Absolutely.
And that's the bit that you do, is get them in front of people to try and help them win more.
Yeah, I try to make them look good. They do a lot of it
Well, there's some great agents out there, who are helping them out. So it's really, so you get this advantage. So you must be looking at properties for sale all the time, or trying to find off-market type stuff to put your agents in front of them?
Yeah, we've got a portfolio of off-market listings at the moment, and we've got a database of registered hot buyers that we can link them up with.
Okay.
But in my role, I get to talk to a lot of our agents who are feeding me in real time feedback about the market. So it's nice to have the finger on the pulse that way.
Interesting stuff. So do you think you'll stick in real estate as a career? I want to get onto your portfolio, but you obviously got a passion for real estate.
Yeah, I just celebrated my 10th year on Monday with this agency.
Okay.
So I think I'll stay in for the long haul.
That's pretty cool.
Yeah.
So you say you love it. Like, I meet some people that say, I love property. Like, why do you love property? You like it, love it because you can make money out of it?
Absolutely.
Is that it?
I wouldn't do it for any other reason.
Well, at least you know why, right?
Yeah, absolutely. It's definitely the monetary value for sure.
Yeah, that's cool. So that's why you've got the patch. So you invest in property for wealth creation.
Absolutely.
Okay.
Yeah. Definitely don't want to do it to lose money.
And you've been working at this agency for 10 years. As part of that journey, when did you start buying property?
At 19.
At 19. Was that when you started working at this agency, or did you already have property?
No, I had a few jobs before that.
Okay.
I was in uni studying at the time, and I was juggling 3 part-time roles.
Okay.
Purchased my first property then, saved up.
When you're at uni?
Well, I was at uni,
yeah.
It was a tough gig. But mum and dad were generous enough to go 50-50 with me.
That's cool.
Yeah, and just kind of took off from there.
And what jobs were you doing to raise your 50% of the deposit?
I worked at Hungry Jack's.
Oh, did you?
Yeah, for 6 years of my life. Started when I was in high school, and then I got a job at a place called Amart All Sports, which has since shut down on the West Coast. I did that part-time while I was working at Hungry Jack's, and then I waitressed at a Chinese restaurant down the road as well.
Okay.
And then I had 2 students that I tutored because I was studying teaching.
Okay.
Yeah.
Wow. Keeping busy. But it's a great story. I think, that again, the successful investors that I see, they work hard, they hustle hard, and they know where they're going. So why property though? Did you go, is there a family history with property, or is there?
Mum invested in property, but I think property for me, because like I mentioned before, I am quite risk averse, and I think that property is probably the safer option versus shares. Bit volatile. I'm not quite versed in that area, so I don't have the confidence, but property, I feel like it's returned quite well for my parents, and they were my case studies, and I thought, why not?
So did they say, Patricia, get in a property? You went, I want to get in a property, can you help me?
Yeah, I said, I want to get into a property, can you help me?
And did they go, yeah, sure, no worries?
Yeah, they did. They said, are you sure you can make the 50% home repayments? Because if the answer's no, then it's not going to happen. And I said, yeah, absolutely. I'll make sure every month I meet my repayments.
I guess there was evidence that you were committed to it if you were working at Hungry Jacks for 6 years, right?
Yeah, part-time. I'm casual, actually. Yeah,
Do you ever eat it anymore, Hungry Jacks?
I do. I'm ashamed to admit it, but I do.
What's the best thing on the menu, you reckon?
Oh, you can't go past a bacon deluxe.
It's pretty good, isn't it?
It was pretty damn good, yeah.
What did you do at Hungry Jacks?
I started out in a position called restaurant where you just clean tables, and then went on front counter, and then did boards, which was making the burgers, and then did specs and fries, which is your nuggets and chips.
Okay.
Yeah.
What's the best job to have at Hungry Jacks?
Definitely boards, because I loved wrapping the burgers. And the worst was we called it drive-through. You took the orders. And
Yeah, you know what? And it's sort of getting a little bit off tangent, but it is connected because I think, 6 years at Hungry Jacks teaches you the value of hard work and how that can translate into wealth creation, right? But
absolutely.
I watch these young kids at like drive-thrus, and I don't go to McDonald's very often. It's only if I'm hungover and I need to get some nuggets or something or other.
Yeah, we've all been there.
Yeah. But the skills that you learn, like to be able to take orders simultaneously with taking credit cards to, like understanding systems and processes and how if you get that right, you can achieve lots, and where if you get the systems and processes wrong, how it breaks down. And the same applies to property investing.
Oh, definitely. Yeah, absolutely. And you also learn to have thick skin. Things aren't always going to go your way. You're going to deal with irate customers most of the time because it is hospitality.
Yeah.
And you learn to just get through those periods as well.
It teaches you resilience, and, I think any kid should be doing, I did part-time jobs for Pizza Hut. And
Pizza Hut.
Yeah, I worked at Pizza Hut 6 years delivering pizzas, like ribs and stuff, and worked in retail part-time, delivered flowers part-time. I've done anything you could possibly imagine I've done. But, it's
hustled.
good. Yeah. It's only when you get older in life that you actually work out the skills that you developed back then. So I think if you're not doing that, you miss a real beat around resilience and understanding people and talking to people and dealing with conflict and all this sort of stuff,
I absolutely agree.
It's all essential skills as a property investor. So your parents ponied up half the deposit to get into your first property.
They came up with 100% of the deposit, but once we secured the deposit, I paid 50% of the loan repayments.
Okay.
Yeah.
And when we come back from our break, Patricia's going to tell us where that first property was. Back in a moment.
Worried about making the wrong choice with your next investment? You're not alone. If you truly want to become the master of your own lifestyle design through real estate, then you need to speak with Dash. Buyers Agents, who'll help you acquire cash flow positive properties in high growth areas with value add potential, so you can create more freedom in your life. Visit dash.com.au/SPI.
Welcome back, everyone. Here with Patricia Cheah. Did I get that right?
Yes, you did.
Okay, pretty good.
Chia seeds.
Yeah. All right. Property investor. Started off young at 19, and I hope you're enjoying the chat so far as I am. Where was the first property?
First property was in a suburb called Yangebup, one suburb away from the coastal area of Coogee.
Okay.
It was going through a redevelopment at that stage. It's probably more of a low socio-economic community, and probably still is, but there's a lot of new housing getting built there, so it's slowly changing.
How much did you pay?
Oh, this is really testing me. $290, I'm pretty sure. And it was just a block of land.
$290?
Yeah.
Okay, for a block of land.
For a block of land.
And you built a house on it?
We didn't.
Okay.
So that was probably my first mistake.
So you just bought a block of land?
Just bought a piece of dirt, yeah. Pretty much.
Okay.
Yeah.
So you weren't generating any income to pay off the debt?
No, which means there was no tax deductions either. And I learned that the hard way. Yeah.
A lot of people don't actually understand that. And the regulations changed quite a lot recently as well, where, people think they can land bank, but they're getting sort of tax incentives on it. But anyway, it's probably for another time. Do you still have this block of land?
No.
Okay.
We sold it a few years after.
Okay. For how much?
About $310.
Okay.
But we had paid down the loan, so there was a little bit of fat to work with once we had sold the property.
So first experience in property, failure or success?
Failure.
With a big F or just a...
With a capital F, yeah.
But I imagine you learned quite a lot
I
from
learned
it.
heaps, yeah, definitely. I learned that, with a non-income producing property, there were no benefits really.
Who suggested you should buy a block of land?
My friend's uncle had purchased there.
Okay.
And he mentioned, it's a great area, it's up and coming, you should probably purchase. And it was a private seller. We drove past it, called them, and within a few days we had written up the contract.
Okay.
Yeah. So I've learned
so
that.
another learning, yeah.
Yeah.
And I'm sure it was a friend's uncle, was it?
A friend's uncle.
Still a friend?
Still a friend.
Yeah.
Still a good friend.
Still a good friend. Yeah, you got to be careful and considerate of who you listen to when it comes to taking property investment
100%.
advice, right? But I'm sure we'll get onto that. So did you sell that before you bought your second property?
I sold that, I think, because the second property I bought was off the plan. So I had signed the contract already.
Okay.
Yep. So
before you bought the block of land or after?
After.
Okay.
Yep.
So second property off the plan, whereabouts?
In Northbridge, which is Perth CBD.
Yeah. That's quite a trendy sort of area, Northbridge.
It's trendy, but it's rough.
Yeah.
There are patches, yeah.
Off the plan?
Off the plan, yep.
All right. How much you pay for it?
Memory was 454.
454. And how much deposit did you need to put down in order to secure it off the plan?
I think I put down only 10,000 for that one.
Okay. You put, so 10K in. And how long was the settlement before when you put your money in to get the keys?
About 2.5, 3 years.
Oh, it was really that long?
Yeah, it started construction, yep.
And was that like the timeline that they projected when you signed the contract to buy, or did it blow out?
It blew out by about a year.
Okay.
It was meant to be about 2 years.
Okay. Yeah. So is that your only off the plan purchase, or you've done other stuff off the plan?
That was my first and only, and will always only be the only one. I won't go back there again.
Well, let's have a discussion around that. So it sounds like another hard lesson.
Oh, and costly.
Yeah.
Very costly. Yeah.
Why was it costly?
I lost 50 grand in the sale price for it.
Okay.
Yeah, when we sold it, and the strata fees was just killing us each quarter.
Okay. So I hear this a lot, and I'm not going to beat up off the plan purchasing. If you do it well and you get the right asset at the right time, people can absolutely do excellent on off the plans. If you sign up at the bottom of the market, and when the things finishes at the top of the market or on a rising market,
you've done well.
You can do really, really well out of it. But the opposite of that is an issue. What happened in your situation?
We probably signed up at the top of the market. I think we bought it in 2007 from memory. Yeah, around that time. And I didn't mind that it was going to take 2 to 3 years to build, because it meant that I didn't have to make any repayments during that time. And then the market came tumbling down, and I was lucky that I was still able to get the finance for that apartment at the 454
price. Okay.
Yep. And they had done a valuation. I don't know what it came in at, but they approved finance.
Okay. At 80% or at 90%?
I think we were at 90 at that stage, so we paid LMI.
Okay.
Yeah.
And lender's mortgage insurance is what Patricia's talking about. We write about that a lot on smartpropertyinvestment.com.au. If there's a term that you're not familiar with, go and check it out. And I'll do a podcast on it at some point. So you settled at 454, and then you sold it at how much?
I think it was 437,500.
Okay, 437,500.
But by the time you add in the stamp duty that we paid, it was about a 50-ish grand loss, give or take.
And how long did you hold the property once you got the keys before you sold it?
Once we got the keys, I think it was only 2 to 3 years.
Okay, but you rented out during that.
Correct.
How was the yield on it? Was it okay?
It started at 450 and then quickly dropped to about 350, and I think in today's market 320.
Is that because everyone else was renting out properties in the block and it just pushed the price down? There wasn't demand?
I think more apartments went up during that time, and the market was just saturated. Tenants were spoilt for choice.
Yeah. I think, again, another podcast for another time just on the dynamics of the plan purchasing. But what we're talking about here is you agree to buy a property at X price, and whether or not it's worth X price at that point in time when you actually get the keys is a bit of a gamble and a risk. And also buying off the plan, there's a lot of fees packaged up in it as well, and how people are incentivized to sell this stuff. So be considered if you're buying off the plan. Again, I'm not going to go in too much, but for you in this experience buying off plan, what did you learn from it other than don't do it again?
If you were to do it again, maybe time it better. I guess you couldn't really predict what the market was going to do in 2 to 3 years, but if you looked at fundamentals, you could probably tell that the mining boom was tapering off a little bit. Yeah, I don't know. I don't think I would do it again, though.
You wouldn't do it again?
Yeah.
Who advised you to buy this property?
Not a friend's uncle this time. It was the place that I worked, a colleague had said, if you buy it now, hold on to it, you don't have to pay your mortgage and you'll make 50 grand in 3 years' time. And I'd listen to them.
Okay. Which colleague was this? Was this at Hungry Jack's, or was this at the
I was in property by then.
Okay.
It was from I worked in a telemarketing capacity part-time. And
selling these things?
No, thank God.
Okay.
Yeah. But selling home and land packages.
Okay. And did the person that recommended you buy this property get a commission for recommending you?
No, they weren't from the agency that sold it.
Okay.
Yeah. So there was no kickback for them, but they had said, just buy off the plan, you'll make money.
Okay.
Yeah.
Which, if you do it at the right time,
Yeah, I'm sure you do. Yeah. It's just not happened to me just yet.
No, well, to be fair, I probably know a lot of people in property, whether they're property investors or work in property. I don't hear many people or you only hear the good stories buying off a plan. Most people hide the really bad stories. Yeah.
Yeah, that's probably true.
So it's good that you can come and have a chat about it. And it sounds like your experience, $50,000 is a lot of money. Like,
I think at that time, that was my year's salary.
Yeah.
Yeah.
That's got to hurt.
Oh, it really did.
So how did you celebrate the sale of the property, or did you put your head in your hands and just sob?
I cried. It was probably
Did you actually cry?
I did.
Yeah.
I cried.
Anyone console you going, it's all right, do it again?
The agent tried to. It didn't really work. But no, I cried, and I think that it was more relief than anything.
Yeah.
Yeah, because it's been on the market for a long time.
So you got some scar tissue in your property
I
journey.
do,
So how did you actually get yourself into third? Or most people would have stopped and gone, that's it.
Yeah,
No
I was
more.
close to doing it, but I'd seen how well my mum had done with property, and I thought, look, it's probably not the property market, it's me choosing the incorrect properties, and I thought I'm going to give it another shot and see how it goes. And I did, and I'm glad I did.
What was property 3?
Property 3 was a duplex in Carlisle,
Yeah.
which is on the peripherals of the city, so not too far from Perth CBD.
Yeah.
I still have that now, and it's performed very well.
So did you buy, is it like a townhouse or is it a duplex?
Duplex,
Like a
yes.
freestanding house with two beds?
Yeah, common wall.
Common wall, in between the two.
Yeah.
And how much did you pay for it?
Paid 338
Okay.
for that one.
And so 2-bedders, 2 3-bedders?
Mine was a 3-bedder.
Okay.
3x1.
3x1.
Very old.
3 very old. Okay.
Yeah.
And what sort of valuation do you think it is today?
Oh, it's dropped back because Perth has come back a bit. Probably about 400 today, but we got it valued 8 months after we purchased it, and the valuation came in at 450.
Okay.
So it's come back quite a
Yeah.
bit.
But, it'll bounce back at some point in time.
Yeah.
And what rent are you getting on it? I guess you're getting 2 rents on it, so...
I've only got one half of the duplex.
Oh, okay, one half the duplex.
Yep.
Okay, cool. What rent are you getting
Rent
on it?
is $260.
Okay. So your yield's not bad?
Not great, but
Yeah,
not bad.
Not bad.
Yeah.
That's good. And you got good tenants in there. They just
They're
pay
new,
on time.
so
They're new.
I've still got my fingers crossed.
So this property's still in your portfolio?
Correct.
Okay, cool.
Yeah.
So the first 2 properties, a
They're
block of
gone.
land, they're gone. Okay. Let's chat about property number 4, but I'm going to go to a break beforehand. Back in a moment.
We get it. You're here listening to the Smart Property Investment Show, and you're being interrupted by this ad. We value your ears just as much as your eyeballs, so we'll be quick. Join passionate property investors on Facebook today, and we'll fill your Facebook feed with useful tips and tools, plus free education from industry experts and a tribe of people who get it. Passionate property investors. Find us on Facebook now.
Welcome back, everyone, here with Patricia Cheah. We're up to property number 4, and it sounds as though the journey thus far wasn't a great one. They got one sort of win in there with your duplex in Carlisle. Property number 4.
Property number 4, another duplex in Dianella.
Okay.
So venturing north of the river now. Another oldie, 2x1
Yep.
on a 800 square metre block. So share that with a neighbour, about 400 square metres each.
Yeah, that's cool.
Yeah.
How much you pay?
305 for that one.
And value today, you reckon?
Oh, probably 350. Came back quite a bit. We valued it a year after purchase, 395.
395. Okay. So this is just a story of Perth, really.
Yeah.
Properties coming back in value. Property number 5.
Property number 5
Yeah.
is Bourbon Street, Hamilton Hill.
Hamilton Hill.
Yep. So
Where's Hamilton Hill?
on the border of Fremantle, next suburb
Okay.
on. Yeah. Coastal.
Yeah.
Yep. Development block. So we can build 2 on there.
Okay.
Corner site, so 2 street frontages. It's an old 3x1,
Okay.
freestanding, and purchased it for $390.
$390. What size is the block, sorry?
$594.
Okay. $594. So this is in your portfolio. At a point in time, you might do something with it. But
Hopefully, yeah.
And what sort of rent are you getting on at the moment?
That one, I think it's rented at $275.
Okay. So yield's okay.
Yeah.
Traditional. It's what you expect in Perth.
Yeah, correct.
Okay. Property number 6.
Number 6, Forestfield,
Okay.
eastern suburbs. Huge development happening out there at the moment. That's a house, 3x1.
Okay.
Purchased it for $412,500,
Okay.
and yield is very low, 220.
220. And by the way, you can't see, but Patricia's got these numbers in her head. There's no spreadsheets or anything, so she obviously knows her portfolio. Okay, so that's still in the portfolio. So you said So there must be 2 more properties. Is there? One more? 2 more. Okay.
One more.
What's next?
Como.
Yeah. Okay. Which is for our listeners?
Right next door to South Perth.
Yep.
Yep. So on the river. Purchased $450.
Yeah.
Valued 6 months after at $490.
Okay.
2-by-1 townhouse in a group of 4.
Okay. So a small block. Yeah.
Yep. Rental yield $335.
That's not bad.
Yeah, that one's a bit better.
Okay. So that's it.
That's it.
Duplex.
1, 2, 3, 4,
Duplex.
5,
Yeah. Okay. So total value, do you think, of your 5 property portfolio?
I think it's come back. I think we're at 2 at the moment.
Okay. 2 mil?
Yeah.
And how much debt are you carrying on it?
I think I'm leveraged at 93%, so 1.8.
Okay.
I think. Yeah.
You're at what, 93%?
Yeah.
Oof.
I know.
You're young, you got time on your side, but a lot of people. But you're telling me that you're risk averse.
Well,
I'd say 93% is pretty.
A year ago, I don't think it was 93. It was a lot lower than that. But revaluing all those properties recently with the price going back, it's really pushed up the LVR.
So is that it for you for the moment, or you're still out there hunting?
I'd love to hunt more, but no lenders will lend to me.
Okay.
I'm maxed out. But if I could get funding, I'd absolutely jump back into it.
Okay. Well, we'll chat about where you would do that later on. But something's happened in your journey and portfolio where you've bought a block of land, got hit on it, bought an off-plan apartment, got hit on it, and then you must have done something to change the way in which you shape the way or your strategy in property investment. What happened?
I started working at a buyer's agency firm who had geared me up with all the right knowledge. It was the lessons I learnt there, I felt no one could ever have taught me, and it was invaluable to me. So I couldn't have gone to uni to learn it. It was very much on the job training.
Yeah.
So I learnt a lot from there and applied a lot of those fundamentals to my journey thereafter, and just things started going right from there.
So I'll ask you off air who the company was, but if you had to crystallise what those 3 key learnings were when you started working within that buyer's agency firm, so our other listeners who might have your experience can learn from, what would they be?
I think the main one would be the building should be less than what the value of the block is worth. So work to a 70, 30, 60, 40 ratio. So more value in the land because it appreciates and building depreciates. Pay principal and interest if you can.
Yep.
Unfortunately, when I started my journey, I went interest only on all of them. They're all P&I now, but it just allowed me to borrow a little bit more. And look for properties that are in areas which aren't out in the outskirts, the greenfields where there's a lot of first home buyers, areas where it's already built up and land is scarce.
It's sound counsel, I think, relevant to nearly every property investor. Was there someone in the business or a personality who sort of put you under their wings and sort of went, come on, Patricia, this is how you do it?
Yeah, there was. Yeah. It was the owner of the company. He's highly knowledgeable in property and he's an investor himself. So, I hung on to every word.
And if you're taking advice from someone, you want to see them, going back to your friend's uncle, you just got to be considered who you take your advice from and do they actually do it themselves? And whether it's a buyer's agent or whether it's even your accountant, like my accountant, that's probably the largest property portfolio I know. So he knows what he's doing. Yeah. And there's evidence, don't listen to a taxi driver telling you to buy somewhere, right? Maybe taxi
unless they're doing
pretty
it
knowledgeable.
Yeah.
That's really cool. So if you had to sort of describe yourself as an investor, what sort of investor are you?
I think I'm pretty calculative. I like to know my product and I like to know the returns before I jump into it, and I do a lot of research. So for every 50 properties I look at, maybe only 3 will really fit the bill for me. Yeah.
And I don't normally ask ladies these questions, but how old are you now?
32.
Okay, so you're 32.
Yeah.
So, and you've already had 10 years in property.
Yeah.
Okay. So
10 years at this agency.
10 years at this age. Okay. So how long have you been in property now then?
Since I was 18.
18.
Yeah.
So you've seen at least one cycle, nearly 2 cycles.
Yeah.
Right?
Yeah.
But at 32, you've still got, in your working life, probably 3 or 4 more property cycles there.
Yeah, I hope so.
Starting young is the key.
Yeah,
right?
Absolutely.
Do your friends know that you have a portfolio like this? Like you're sort of, people you knock around. What they think you think you're mad, or
they do.
Yeah.
They think I'm absolutely mad, and they tell me I don't know how you could carry that amount of debt. But I think I have enough faith that the property market will turn, and that in the long-term game will really pay dividends. So I'm not really looking at short-term, and maybe a lot of them are more thinking short-term.
Yeah, I've got to quickly make a buck. The challenge in property investing, particularly in markets which are flattening or even dropping, but with you, and talk about Perth to come back at some point, is your ability to hold those assets in fluctuating markets. So we talk about cash flow.
Yeah.
This is a negatively geared property, it has to be.
Yeah,
property portfolio.
Correct.
Probably I'd be plucking numbers out, but it's costing you numerous thousands of dollars a year to hold this, right?
Absolutely, yeah.
Yeah. What's the sort of post-tax position like on this?
Post-tax as in?
As in, like, once you do your tax, are you sort of getting towards neutrally geared sort of situation?
Still heavily negatively geared. Yeah, so I get a very healthy tax return.
Which
I live off every year.
Okay.
So I need to ration it.
Oh, you live off your tax return?
I do, yeah. Yeah.
And how do you go about getting more money, financing? Like, can you work harder and make more money, or?
That would be the next step, yeah. Or maybe do a reno, increase the rent that way, yeah. But I think wage growth would be the next step for me.
Good.
Yeah.
Maybe your boss is in this podcast.
Oh, well, I think I might have to send it to him. Yeah.
I think it's, to get behind young investors and show us how it's done. But, it's an interesting journey, 93%, that's a product of the market. If you had your time again, would have you bought all your properties in Perth?
I would, yeah.
Really?
Yeah.
Why? Why is that?
I don't know the other states well enough. I think if I had the luxury of living there and experiencing the lifestyle and doing research in the other states, then absolutely wouldn't hesitate to invest. But I'm a pretty hands-on investor, so to trust a third party or a buyer's agent to invest my money, I'm not quite there yet.
Okay. So by hands-on investor means you're a control freak.
Correct.
Yeah.
100%.
So what needs to happen for you to shift your mindset to maybe be a bit more accommodating towards paying for advice for trusted advisors?
I think if there was an advisor that could show me hard numbers and show me their own case studies of either properties they've owned or properties they've purchased for clients, I think that would build up my level of confidence.
Because they are out there, some very good buyers agents.
100%, believe you. Yeah, they are. I've met some phenomenal buyers agents.
I'm sure people, they all listen to this podcast, so I imagine you probably get a whole bunch of LinkedIn messages or what do they call them, direct messages via whatever social thing you use. The challenge is being set. Can you persuade Patricia to pay for a buyer's agent? Yeah, and I always look for the positives in a portfolio and the positives in a property investor. But if I was going to take a more constructive criticism approach to this, I would say that you got 5 assets all in the same market, and a market which has been going south rather than north.
Correct.
You might need to
diversify.
Yeah. Yeah. And this is not me giving you property advice, by the way, because I'm not a licensed professional.
Yeah.
This is just talking about this in general. But I think you might benefit from just having some conversations with people to expand your knowledge base and maybe just, because as I identified, something happened between your second property and your third property. Yeah. And that was, a trusted mentor or trusted advisor weren't paying for them, but who helped shift your mindset around this. So, success leaves clues. So something happened there, and maybe it's time to start expanding how you think of the world.
Yeah, I have been thinking about it for a while. I've been tossing up whether to go interstate or go into commercial. So I haven't quite worked out what I want to do yet.
Well, there's another layer of diversification there. Yeah. And I hear the commercial market's not that bad in Perth. There's some good opportunities
Perth is doing well for commercial, yeah.
And your parents and about your property portfolio, what's their view of it today? Do they think, go for it, or you don't tell them?
I don't tell them how much I owe the banks. They'll probably hear it now. But they have always been my number one supporters. Yeah.
And this sort of 1.8 million, does it concern you? Do you think that's a big number, or it's not hurting you, obviously? No,
not hurting me. For as long as I can work and I've got a job and I'm hungry to work, I think I'll be fine. But the minute that I'm unemployed, I think that's when I'll start really panicking.
Yeah, and do you have a sort of strategy for that? What would you do? What's your what if? Sell.
Yeah.
Just sell.
If I couldn't get a job, then sell.
Yeah. But I think you're pretty marketable. You should be right getting a job. So what's next then? Say I'm the bank of Phil Tarrant and I say here is pre-approval for $400,000. What would you do with it?
$400,000.
Don't say buy in Perth.
I won't buy in Perth. Okay. I would.
Well, maybe you've got the right advice. Maybe it is right, but but what would you do?
I think if the Sydney market dipped a little bit more, I'd seriously consider.
I don't think that's going to happen.
No?
No.
I think it's on its way up.
I was at an event yesterday, actually, and I posed a question to the assistant treasurer And I went, what's going on with property? And his view is that in Sydney, Melbourne markets, is that you're going to start seeing it. It's not going to go down. It's going to go north. And I wouldn't say they were optimistically bullish about the market, but they were pretty
confident.
They're pretty confident that it's going to continue to be a very important asset class for Australians and a big driver of wealth creation for Australians. And this whole sort of wealth effect of when people feel wealthy because of their property in the markets, that sort of translates into so many other economic drivers.
Absolutely,
which is a good thing. But on that basis, do you go without because of your property portfolio? Like, are you eating baked beans and 2-minute noodles every night, or you got some money to actually go and?
I have a very caring mother that will cook for me every weekend.
Do you still live at home?
I don't.
Okay.
No, I'm out of home. But if I was without, I would go home and eat her food.
Good food.
Good food.
So what's your background? Like, where's your family from?
They're from Malaysia.
Okay.
Yeah, immigrated here when I was 1.5.
Okay, so you were born in Malaysia.
I was.
Okay.
Yeah.
Do you identify as being Malaysian, or you identify being?
I always try to, but I feel like I'm more Australian because I have lost the language. Yeah. I still speak a little bit of Chinese, but it's not as fluent.
And what's sort of the Malaysian or I guess sort of Chinese attitude towards property? It's like, this is good, but pay cash normally, right?
It is. Yeah, it's if you can't afford it, don't take out a loan, pay cash.
So that's why that 1.8 million is probably
it's going to scare scare mum a bit.
Well, Patricia, I really enjoyed the chat. Thanks for coming in. We've gone a bit longer than usual, but I've really enjoyed the conversation.
Same.
And
Same.
I really I'm in awe of your hunger and your passion for trying to maneuver and do stuff to actually, work towards wealth creation. Yeah. But why do you want money? Like, I probably should ask you that. Like, is it just for the sake of it, or you like buying nice things, or?
I think it's security.
It's security.
100%. Yeah.
Like, you don't want to go travel the world and do all that sort of stuff?
I'd love to do that,
Okay.
yeah. But I'd like to know I had the funds to do that, not take out a loan, not put it on my credit card, had cold hard cash to do those things.
So if you work hard now and build out a portfolio, what sort of 10, 20 years going to look like for you? Are you going to still be working hard, do you think, or do you want to sort of do something else?
I was asked this 5 years ago and I said I wanted to retire early, but I don't think I could. I think I'd want to work for the rest of my life for as long as I could, I think, but probably doing things that I enjoyed doing. So maybe doing renovation projects or a development, something to do with property, but within my own portfolio.
Okay.
Yeah.
And do you surround yourself with other property investors? Like, you got like a network of people you talk about property?
I do. We've got an online forum. It's it's on a Facebook group.
Yeah. So you just talk to other property investors
but I've not physically met them.
Okay.
Yeah.
They're like social friends, whatever they call them.
Faceless social friends.
Faceless social friends. But it's important, I think, for property investors to surround yourself with other like-minded people.
I think
that's a great way to learn. And I'm fortunate that because I do this, I speak to investors all the time, right? So it's a real privilege to do so. But how else do you sort of keep educated? You listen to Smart Property Investment Show, so thank you.
I do. I am.
Any other podcasts you listen to? Don't name them unless it's a Property Couch. They're pretty good.
Yeah, are they?
Do you listen? Yeah.
Oh, I've not heard of them.
Yeah, you've never listened to Property Couch?
No.
Oh, yes.
Okay, I might have to get into that.
Yeah, they do a very different. Ben and Bryce, they're buyers agents, mortgage brokers type of people. So
for the New South Wales market?
No, they're down in Melbourne, but they cover Australia. So they come from as property professionals and advisors, whereas, the Smart Property Investment Show is just me as a punter who is a property investor speaking to other property investors, right? So, but if, it's good. What else do you do in terms of education? You read books and stuff?
I do read a few books. Yeah. I think because I work in the industry, when I get a chance not to...
Yeah, so you just get through osmosis every single day.
Yeah.
Okay.
Yeah.
So when we meet again in a couple of years' time on the podcast, what do you think we'll be talking about?
Probably Sydney property and how I've invested in here or diversified a little bit more.
How many more properties do you think you'll have in 2 years' time?
In 2 years' time?
In 2 years' time.
I think if the banks ease up their lending, another one.
Okay.
Yeah.
All right, cool. Yeah. Well, we've got that now. What's today's date? 5th of September or something like that? 5th of September. So
2019.
We'll check back and see how you're going. And check in. But thanks so much for making the trip over from Perth.
No worries at all. Thanks so much for having me.
Who'd you fly with? Qantas, Virgin?
I flew with Tiger.
Okay.
Yeah, not the best. It was rough.
That's all right.
Yeah.
That's cool. And what are you doing tonight? Are you sort of...
I think I'm going to sleep.
Okay.
Yeah.
Sounds pretty good.
Yeah.
Well, go and enjoy Sydney then.
Thank you.
But thanks for coming in. And if I'm in Perth, I'll check in as well and see what you're up to. But thanks for coming.
Thanks for having me.
And these are great chats. And look, please get in touch with the team. We really want to get investors from all shapes and sizes: 1 property, 2 properties, 10 properties, 50 properties, boys and girls. But I want more female guests in. So come and have a chat. It's good fun. It's easy. Yeah.
Yeah, I'd love to. Yeah.
And this is the only way that we can all become better property investors. Is we're fortunate with the Smart Property Investment Show that we have a big community of property investors who are all passionate about trying to create wealth through property. So if we can share those lessons, those learnings, myself included, I'm always happy to talk about my portfolio. Come on, get in touch, check it out. If you want to direct message us through social, do that as well. Just search Smart Property HQ or track us down. If you're not yet subscribing to our daily morning newsletter, so you're the first to know what's happening in property right across the nation, smartpropertyinvestment.com.au. And again, please do keep those review comings on iTunes or wherever you're listening to this podcast. We get a real kick out of them and it helps us really shape the program. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
If you're a regular listener to the Smart Property Investment Show, then odds are you're already a property fanatic who loves hearing stories on investing from real people, the good, the bad and the ugly. Be with people just like you and join the group Passionate Property Investors on Facebook now. Become part of a community who know what to do and when to do it. And the time to do it is now. Passionate Property Investors. Tribe, tools and tips. Find us on Facebook today.